Hi everyone, Nikolai back again with FinanceFeeds here at the IFX EXPO Dubai. I'm here with Natallia Hunik from Advanced Markets. Natallia, welcome.
Thank you.
It's a pleasure to see you again.
Likewise.
I guess to start off, my first question is, what are your impressions? The first time we're all able to finally meet in in a face-to-face environment. How has the show been so far? I know it's only the first day, but sort of. What's
absolutely.
the general?
I'm so happy to be here. I think I've never seen FX people smile so much. We all missed the interaction for the past 2 years, and even though we're coming here with all the social distancing and other restrictions, I mean, it's just such a great pleasure to be able to shake people's hands and have in-person conversation. I think everyone has missed dearly that aspect of our interactions.
Yes, indeed.
And the show has proven to be very productive so far. We've certainly enjoyed the atmosphere and meeting all the industry colleagues and clients and prospective clients. I think it's probably here to stay. I believe in that. I mean, we probably you probably talked to a lot of people. I talked to a lot of people. We see just the general trend of a lot of companies moving over to Dubai and entering that market. So I think we'll probably see this and other shows being held in Dubai in the future as well.
Hopefully, I don't know if you had time to check out the pool, but it's pretty nice.
I'm not staying here, but I'll check some other pool at another hotel, hopefully, at some point.
In terms of advanced markets, let's talk about some pretty recent news. I think there was some investments into advanced markets from some outside firms, Forexify and Corbel, if I remember correctly.
Right.
Can you sort of give us some insights into advanced markets' sort of expansion plans, and is this investment part of some future plans to expand?
Yes, absolutely. I mean, this is a new milestone for the company. Advanced Markets is one of the oldest standing companies in this business. It's been in operation since 2006, and they already had capital infusion from Macquarie Bank and Cantor Fitzgerald, several years ago.
Oh, I see.
And so we have 2 additional investors joining the group, and it's a great new development. We're looking to expand our global footprint, also improve operations and introduce new asset classes into the equation, and we're very excited to have this 2 new investors to propel our global growth even further.
And are your offices are only located in the United States, or you have offices elsewhere?
No, we have offices all around the world. In the US, we have Boston, New York, and Charlotte, North Carolina, where the headquarters are. So it's mainly operations, some sales and marketing. But we also have global offices. We have 2 licenses, one in Australia and another one in the UK. So we also have a London office. We have an office in France. We have office in Japan, and we have office in Asia. Yeah. So we do have already global footprint, but we're looking to extend even further.
Cool. And strictly from a broker B2B perspective, I guess, why does it matter that let's say a liquidity provider, and I'm sure you know a lot about this, that a liquidity provider is a 100% like pure STP, straight through processing model?
Right. So I would add to that it matters, perhaps not to everyone, but if you're in the market and you're a fund manager, you're someone who's looking to make money in the market, you probably do want your liquidity provider to be 100% STP, because that is the only model in the market that delivers 100% transparency.
I see.
So with us, we're very transparent about what we do. When you send a transaction through, we have a back-end reporting that tells you which provider was behind it, how many legs the transaction had, and this eliminates a very important topic in the FX, which is the conflict of interest. It's not only in FX, but the conflict of interest exists, for example, also in equities. I mean, we've witnessed the Robinhood.
Yes.
We've witnessed the questioning and everything, because there is the conflict of interest is always there between the broker and the client, and that is the only model that eliminates the conflict of interest. Now, I mean, that model, might not be suitable to everyone, and sometimes you have people who actually like to be to have a market maker on the other side, because there are certain benefits. Your execution is taken by the dealer; it's processed faster, for example, as opposed to sending it to the street. So I think it depends on the objectives of the people of the person who's looking for a liquidity. But I would say, certainly if you are looking for ultimate transparency and removal of that conflict of interest,
right.
You probably want to deal with someone who is 100% a DMA.
Mm-hmm. And if I may, a follow-up question, mm-hmm. do you think that in that sort of transparency aspect, do you think that regulators are doing enough to sort of, make sure that there's a sort of like a level or, let's say, fair or equal playing field? And I guess I'll let you answer then, maybe mm-hmm. follow up with, with another question.
The regulators doing enough? I would say it's a yes and no. I mean, the regulators, it's a whole separate subject, but they're doing some things. Like, for example, you have the introduction of like best execution policy reports, right. the RTS 2728, which mm-hmm. 27 mm-hmm. being eliminated right now because it's a lot of like data yes. mining and a lot of headache. Mm-hmm. But there's a reason why it was introduced, because there's a general perception of the industry, kind of being not too honest right. With mm-hmm. the users. Mm-hmm. And so I agree with that approach and the push for more transparency. But mm-hmm. you also see the adverse effect of that when there is a push for more transparency. There's a lot of people moving offshore to avoid it, right? Right. So my personal opinion is I think what's missing in that transparency push, I think, is more like self-organization, some sort of like a self-organized body that would have all the brokers jump onto that and kind of adhere by the uh-huh. self-written rules. And yeah. I think there was a FX Global Code of Conduct right. initiative, mm-hmm. But to my knowledge, I think there's from the FX space, there's like mm-hmm. advanced markets and maybe another broker who have signed this so far. So you right. can see it's clearly not being adopted. So maybe the industry is just, maybe not mature enough. And hasn't grown to that step.
Right. And that was going to be my next question is, do you think that advanced markets and perhaps other companies are proactively just doing their own part in mm-hmm. sort of creating this transparency mm-hmm. and really just setting a standard that, maybe has to be set by someone for it to be something that could be adopted on a broader, sort of on a wider scale?
Right.
Is that sort of the case?
Yes, absolutely. For us, there's no other standard. It's been the standard since 2006, mm-hmm. since the time we've been operating, and we always tell that to our clients, and mm-hmm. the clients who are in this business and they're looking to gain from the market. They always appreciate it. Yeah. So do we? I mean, we hold ourselves to that standard mm-hmm. always. I mean, we also have a lot of regulatory bodies that we are responsible to. So I mean that also drives that ultimate transparency, because we have to be transparent for many reasons. I mean, right. one is the belief, of course. We say DMA is in our DNA, which it is. Mm-hmm. We've been DMA right, since right. 2006. Right, right. Yeah. That's
a cool phrase. Yeah. Actually, speaking of DMA, so how can a broker ensure that the partner that they're working with is a true mm-hmm. a 100% STP DMA, like liquidity provider? Like, how do you know? It's a good question, and it's such a loaded one. I mean, if the simplest answer, if the broker is licensed in the EU, you could probably look at the RTS 28 report to see, mm-hmm. Where they're, sending the flow to. But yeah. other than that, if it's outside of the, European Union, it's pretty difficult. I mean, you have to kind of believe what they say, mm-hmm. Right? I mean, or perhaps ask for. Like if you want to know where what's the destination of your trades, you can also ask them, for example, right. to provide the breakdown. But it's the broker's choice. They may provide them, may not, right? Mm-hmm, mm-hmm. You can't really enforce it. Right at this point. If we sort of take a step back and sort of switch over, I know you are an institutional provider, but there's been a lot of talk on the retail side about what's been happening with millennials and mm-hmm. social trading and Reddit traders and whatnot. And obviously we saw the market events that happened months prior with GameStop and a bunch of other different markets. What's your general opinion of all that? And do you think that from a volatility perspective, that brokers should expect that there will be some of these, like, let's say, massive short-term unexpected volatility events? And if they should prepare for that, how can advanced markets sort of be the institutional provider that can behind the scenes, sort of on the back end, support the access to trading, to pricing during those kind of situations?
Right. Yeah, absolutely. So to answer the first part of the question about the whole phenomenon, the crowds, the power of the crowd, I think it's here to stay. I think the crowd has been using the new technology, has been able to harness its power and achieve the objective that they put in front of themselves. I think a great example in FX, which I've certainly seen, is the social trading phenomenon, right? I mean, there's I've heard anecdotally some stories of the one signal provider joining the brokerage firm, and there's like 10,000 accounts open the same week because he has all these followers.
Right.
So as a brokerage house, you would certainly experience an impact of that, right?
And
because
maybe want to jump on that opportunity.
Yes,
right?
absolutely. And plus, you have 11,000 new accounts that are probably trading on the same tick at the same time, right? That's a challenge. I mean, that's very challenging to solve. Here's where advanced markets can help you, because we have access to ultimate, original sources of liquidity in FX, right? Most of the time, brokers, around the world right now are sourcing through liquidity through multiple hubs, right? At the end of the day, it might still be me who's supplying liquidity to like your bigger broker, and then from the bigger to medium size, and from medium size to the smaller one. But if you're looking to access the deepest pool of liquidity, when you come to advanced markets, we have aggregation of all the top providers, top bank and money centers and hedge funds pricing into our pool. So when you experience events like market crunch or out of all these providers, if there is an aberration in some event in the market, some of them might be turning their feeds off, right, to protect themselves. But you have to have enough to make sure that you at least have a reliable source of pricing during that event.
Of
so
course,
you have plenty of providers who have backups, we have PB, main PB, backup PB, so we have redundancy in place to make sure that we can face that type of market event, which right now, if it used to happen every 10 years, right now that type of black swan event has been happening much more frequently. Yeah,
and it seems like it's a lot more unexpected also.
Absolutely.
Because I mean the SNB and the Swiss franc thing, I mean we all knew that it
will happen at some point.
Because it was a central bank decision, whereas here this kind of stuff just comes
from the crowd,
sort of out of the blue, and nobody kind of sees it coming in a sense. If we switch a little bit over to sort of the broker side, so that was traders. Negative balance protection. It's been discussed so many times, but if we look at different regulators look at it differently. Obviously that model has been adopted in certain countries and has been used for a long time, a requirement for retail brokers. But I think my question to you is, do you think that negative balance protection policy actually protects the brokers themselves?
So you're talking negative balance protection for the user?
Yes.
Right.
But that also essentially does have an impact on the brokerage itself. Again, related to black swan events and things like that we've seen in the past. I think maybe the whole GameStop and the Robinhood saga, I think there were some examples of situations, again, like you said, anecdotal situations where essentially perhaps the customer should have been taken out of the market, or however you want to call it, earlier rather than later, and then it could potentially create a situation in the future where a market event like this could actually be very detrimental to a broker, even though such a policy may be on the books with the regulator, and there are, from a technology standpoint, there are sort of stops in place to limit any kind of negative event.
Right. So I see where the regulator is coming from. I mean, the objective of the regulator is to protect the end user, the retail investor. But I also see your point about is it detrimental to the broker? I think it absolutely is. I mean, if you face another catastrophic event, you basically float the bill. You, the broker, float the bill, right? Because you now have to grant all the balances to whether or not they went negative doesn't matter. You have to zero it out, right? For your customers. So you essentially take the hit. Right, and that's why regulators in the EU, they ask now that any new applications put down apply for market maker license and put down a higher regulatory capital, because in the event such as this, if you are floating the bill, it comes from your own regulatory capital, so you have to dip into that, and that's why you can't get by on 100,000. I mean, I'm not sure if you can get by on a 730. It depends on the magnitude, right, of the event, of course, and the magnitude of the exposure. So yes, it does leave the broker exposed. My personal opinion is I also just think that this type of policy, like while I see the merits of it, I just think maybe it wasn't analyzed enough from the perspective of what could be the long-term effects. And I think the long-term effect is also the fact that now brokers are encouraged to do more market making, right, rather than hedging the risk out or doing the back-to-back STP, because they realize that in the event like this, if it goes, at least if it goes against the client, they
right. There's an opportunity there.
There's an opportunity there, right? And otherwise, it's in other scenario, it's all negative, right? Any way you slice it. So.
Right. Basically, yes. Last, I'll end on a personal question. Okay. You're from Boston, right?
Yes, I am.
Red Sox or Bruins? Or both?
Definitely Bruins.
All right.
Yeah, definitely Bruins.
Hockey, my thing too. Natallia, well, thank you very much for taking the time to speak with us. I know you're very, very busy.
Yeah, thank you
and
so much.
We wish you lots of luck at the show, and hope to speak with you, as the days go by, and much success in the near future. Thanks for joining us.
Thank you so much. Thank you. Thanks for the opportunity.